Boom shakalaka, Bitcoin and cryptocurrency tumbling 7% over the past day. In this video, we're going to be talking about why this is not likely the bottom, and also why it potentially is. You'll definitely want to stay tuned. What's up everyone, Randall here from Crypto Love. Today's video, we're talking about this Bitcoin and cryptocurrency crash, why this is not the bottom, but also some reasons why it very well might be. We have very good cases for both of them in today's episode. Before we get into it, guys, make sure to like, subscribe, click the notification bell, come join us over on Twitter at @TheCryptoLove, where every day we share some of the best charts in Bitcoin and cryptocurrencies. Just push the like button. Let's try and get to 1,000 likes. To begin with today, extreme fear, 12. Higher than yesterday. The markets haven't fallen completely. I mean, they stopped around $30,000, but still in extreme fear. Overall down 7% for the day. Bitcoin at 30,880, Ethereum at 2336, BNB at 305, XRP at 50 cents, Solana $63, Cardano 61 cents, Dogecoin at 10 cents. And if you want to know the top coins today to hold, to outpace just holding Bitcoin alone, as a matter of fact, they're up over 500% on KuCoin. The top coins today would be Unifty, Pluton, Tron, Wirex, and eMoney. And if you want to check this out for yourself, add some lower caps for higher risk, but potentially much higher reward, there is a link down in the description. Not only that, while you're down there, instead of selling your crypto in this bear market, you could do what smart money does and borrow against your cryptocurrency, starting at only 0.1% by using Celsius. Not only that, but while transferring crypto to your Celsius account now, you can earn up to $5,000 in rewards, free crypto, while you earn up to 17% on your assets held in Celsius. So definitely, instead of selling, you may want to check out Celsius. There's a link down in the description. And last little thing, guys, if you have some bear market blues, you might want to listen to this episode from Not Crypto Advice Podcast. I've been listening to this podcast recently. It is extremely high quality and entertaining, and it definitely gave me a new perspective with these bear market blues. So I will post a link to that down in the description. Check it out for yourself. Listen while you're driving. It's great for that. Now, today, guys, I have to say that I am getting exceptionally bearish on Bitcoin. Me personally, I'm a permabull, long-term permabull, but the next 1 to 2 years could be a little bit painful. Now, here's why. Well, first off, before I show you anything else, I just want to point out where we landed on. We found support on the 1.618 fib. That was from the bottom here at 3,000 to the top here at $20,000. You can see we bounced almost exactly off of that fib level. Now, I want to erase those because there's too much going on with the fib levels. But we can see Bitcoin has broken out of a few key support levels. So first is this white trend line that we have been in since basically the beginning of 2021, over a year now. That was somewhat bullish consolidation. Well, we broke out of there. Not only that, but we also broke below the 100 weekly moving average. Only the fourth time Bitcoin's ever done that. Not only that, but this dashed white line right here, this is multi-year Bitcoin support. You can see this, many years Bitcoin support. The only time we broke out of that was the brief COVID crash, and we have broken below that. Now, that being said, am I 100% bearish? No, because I've had this red dashed line here for a very long time, saying that if Bitcoin breaks below there, then I become bearish. Right where we are right now, this wedge, this is like me in purgatory. I'm like about to become bearish short term to medium term, but I am still always going to be a long-term perma bull. Now, where could we potentially be headed? Because like I said, this is the fourth time we have broken below the 100 weekly moving average. The first time was right back here in December of 2014. The second time was right here in November of 2018. And the third time was the COVID crash, March of 2020. Now, if we plot out all of those lines where we are right now, guess what? They all basically find a bottom right around $18,000 to $20,000. So that potentially could very well be a bottom, basically bouncing off the resistance we saw back here in November or December of 2017. But not only that, we also could potentially be heading up to the $100,000 to $650,000 from the time frame of June of 2023 to April of 2025. So June 2023, that's still a year away. So we still do have quite a bit of purgatory and waiting before anything happens, if what happened previously with Bitcoin is going to rhyme with what is happening now. Now, granted, past performance can't predict future results, but it seems to me like we have almost exactly the same thing that happened here in 2017 happening right now in almost the exact same time frame. As you can see here, we had a blow off top there. Now, we didn't have a blow off top because we got wicked off, okay? Smart money came in, wicked us off, and nobody got a happy ending with that one. But you can see we found support basically at the $6,000 area for a long time. A lot of people thought $6,000 was the area because that's how much it cost a miner to mine a Bitcoin. And then the bottom fell through the floor, breaking below the 100 weekly moving average. Now, where we are with Bitcoin right now, we've been finding support roughly around $30,000 because that's the average price that Michael Saylor pays for a Bitcoin, because that's the Plan C Confluence floor model, because all these other reasons why $30,000. But we might have Bitcoin break through the floor to $20,000, maybe even to $15,000, because we do have a nice little double top forming here with a 97% chance going down to $15,000 if we break through the $30,000 level. Now, is this a surprise? No. We've been talking about it for many months thanks to the real Plan C. If you're not following him on Twitter, you should definitely go and follow him right now. He's talked about this Confluence floor model. The previous 3 times we had a cross of the short-term holder floor below the dormancy flow floor, Bitcoin price touched the dormancy flow floor. Well, about 60 days ago, we had a cross, and take a look at this. Bitcoin just bounced off of the dormancy flow floor yet again, 4 for 4, pretty darn accurate indicator. Now, previous times, this was as low as Bitcoin went. So hopefully, this is as low as Bitcoin goes. But there's no way to know for sure. We just kind of had to be patient about this, because right now, past 5 years, we've had 5 Bitcoin capitulation events. I've been present for all of them. They have hurt a lot. And up until this most recent capitulation, I didn't really feel that we had felt a serious capitulation in the market where people were scared. But after having 3 capitulation events in 1 year's time, yeah, I'm starting to feel it too, and I'm sure all of you guys are. As a matter of fact, the most recent consolidation period was one of the biggest ones. It was actually higher than the January 2022 crash, and this time 3 billion in Bitcoin realized losses yesterday. Certainly looks like a different story. Certainly looks like we are starting to feel some capitulation. Now, like I said, may continue to keep going, but it may not. And here is why. Because we have some evidence that could be suggesting we are towards the bottom. Now, I'm not saying that we are. Like I said, I'm literally on the verge of becoming short to medium term bearish. Because if we break through this red level here, yeah, likely we're going down to the blue. And hopefully we'll find support down there. Because if we don't, it could look really, really, really ugly. But that being said, the Bitcoin supply in profit, almost in green for only the 5th time in history. Now take a look at the times this was in history where the supply in profit was this low. Well, we had the COVID crash, okay? We also had the very bottom back in 2019. We also had the very bottom back in 2015. We also had the very bottom in 2012. So all of these things would suggest we are in the very bottom. Now, not specifically the lowest price, but in the very bottom. Also here with TA Analyst saying Bitcoin bull run signal for the 3rd time in history, the monthly percent bandwidth, which is this blue area, is below the green level, 0.35. Each time we were in the bottom, a huge bull run followed. So take a look. We were below right here. Guess what? Huge bull run. We were below right here. Guess what? Huge bull run. We were below right here. So this could suggest that we are at the bottom right now, which would be a great time for stacking sats. Going on to this chart right here, now entering the 4th time we've broken below the logarithmic growth curve. Maybe this model finally breaks after a decade, but traditionally it's a stack sats signal. Every time that Bitcoin is broken below the logarithmic growth curve, great time to stack sats, great time to plop some money into Bitcoin and buy some up while it is still cheap. So we'll kind of all have to see what's going on. But all I can say, guys, is that yes, it hurts when the price goes down, especially if you lose money. That's like, it's like getting punched in the gut. But here's the thing. You just put on your big boy or big girl hodl pants, you hodl through it, and then next time this happens, when everybody's like, oh, I wish I would have bought when it was $30,000, you could be like, yeah, I made it through that. Now that Bitcoin's $300,000 or $3 million, I don't care that you're complaining that it's this expensive. So that's all that happens with today's episode. If you did enjoy it, make sure to like, subscribe, click the notification bell. Make sure to check out Token Metrics and also Celsius and also the Not Crypto Advice podcast down in the description. I will catch you guys later. Love you.